Well, Growers Edge, I think, has made us more money by allowing me to survey the local bids that I'm in the area that I want to sell my grain. The local elevators and the ethanol plants know that this information is out there, so they've got to be competitive if they want to get the grain. You know, we've been able to maximize our return on our farm.
Good afternoon, welcome to GrainTV. It's July 21st, 2014. I'm Logan Burgess, and right here is Cody Bills. And to start the week, we once again saw a lot of red on the board in Chicago. We had corn down 6 1/4 on old crop, new crop down 6 cents. We saw old crop beans showing some relative strength off a penny. November was down 13 3/4, and Chicago wheat took a little bit of a breather here today, off just 2 1/4 cents. You know, Cody, as I said, we did see relative strength on old crop beans, significant weakness, and really a continuation of the selling on the new crop. Kind of take us through this bean market. What did we see today? How did the trade react?
Well, in the August beans, I mean, we were only down a penny here, but when you look at November, down 13 3/4, I think one of the things that helped prop up that front month was the fact that we did see some large sales here of old crop beans to China, about 120,000 metric tons announced here early this morning. Those were reportable sales, so those, you know, that just adds on. That's a pretty significant week, right, even if it was cumulative across the week, but that is just one sale here. And of course, we had some old crop sales also last week. So all in all, I think the export picture, we are seeing more demand pick up here. We're already running ahead of pace for old crop soybeans. Export inspections came out today. They were about on par with analyst expectations. We still need to see more exports leave the country here to actually meet expectations here of the USDA. The bottom line here is that old crop beans was able to be supported by demand. When you look at new crop, though, it is very interesting. You'll notice that this is the 5-minute chart of that November contract, and we traded down to that 1065 area where we found a low back on the July WASDE report day. We found a low down around 1065 then. Today we retested it. We found support. We rallied off of it, going up to about as high as 1078. So it was a nice rally here off those lows. We weren't able to close out near the highs of the day at all. When you switch over here to the daily chart, one thing you'll notice is that today's chart we actually gapped down. I do like seeing the wick at the bottom, showing that we tried to test that support level. We're unable to penetrate it, and we rallied higher. I guess we had some customers calling in. They had some long calls. They were wondering if it was time to liquidate. I guess from my perspective, I would like to see that 1065 level broken and closed below. That to me tells me that this bounce, if you were anticipating a bounce here, that bounce has not occurred, that we are in fact going to be trading lower, and that's when I would use it as a sell stop.
Yeah, Cody, you know, if you look here at the bottom of this chart as well, we have the RSI, so technically this bean market is very due for a snapback right now. We'll have to see if that comes tomorrow. As Cody said, we did see some good indications technically that traders aren't yet willing to push this new crop soybean contract to new lows. One thing that could be weighing on this market, though, as we enter the overnight session, are the crop progress numbers that we got out after the close from the USDA. As you can see from this slide here, we have corn still rated 76%. Good to excellent. Soybeans we saw increase 1%. Now 73% of the crop rated good to excellent. So really not a change of the story there in terms of conditions. Conditions across the grain belt remain phenomenal. We see that in USDA numbers. We hear that from talking to producers across the grain belt every day here. So not any change on that front. If we look at progress, though, we now have 56% of the corn crop silking. 19% of beans are setting pods. So here over the next 2 weeks, the weather outlook is going to be very important for new crop prices. And right now, expectations are for very good precipitation over the next 6 to 10 days across the vast majority of the grain belt. So that's going to continue to weigh on prices. And just a reminder here, a little bit of a longer term outlook is this model here that we saw from NOAA last week. This is their August projection, and they're looking for slightly below average temperatures and average precipitation throughout August. So I know we've talked about it a lot on GrainTV here, you know, several months ago. really this kind of late July, early August time period is the time period where you'd expect a bit of a weather premium to get put into the market. We've seen that over the last 2 growing seasons. Right now, all indications that we have at the moment look like that's not going to be the situation. So I guess in my opinion, I think that if you are a producer and you find yourself undersold here on the corn or the soybean market, it's still a good market to sell any bounces on. I think for soybeans in particular, we still have quite a bit of downside. If you have questions about your specific situation or different marketing strategies to navigate this market that we've seen sell off substantially, feel free to call our office. Our number here is 877-472-4607. Thanks a lot for joining us here on a Monday. We'll see you back here tomorrow.